All right, welcome everyone to the first episode of the Exploring the Blockchain podcast, where we document our experiences of learning about the blockchain and make it accessible to the average person. My name is Zane.
And I'm Josh. Today we're joined by Dan Habib, who is going to unpack topics such as his thoughts on blockchain, decentralization, and Bitcoin. Dan, thank you so much for joining us today. Can you start on telling us a little bit more about Bitcoin and its impact on our world?
Yeah, so Zane, Josh, thank you guys for having me. I think this is a great series that you guys are putting on and really helping educate people as to what the future can look like, right? So I think before we can understand Bitcoin and the blockchain, we need to take a step back and really understand what our current financial system is, which is very much a centralized finance system. And listen, right now our economy is in a tight spot, right? So the biggest problem in the world today is inflation. If you look at the latest numbers, we just set a new 41-year high just for this past month, where the consumer price index is at 8.6%. It's extremely hot, and listen, I don't have to tell you guys listening, you guys go to the pump, gas is at record high prices, you go to the store, food's very expensive, and literally inflation is eroding the buying power of our dollars. And the definition of inflation is too many dollars chasing too few goods, right? So we know we've kind of had a perfect storm of both demand and supply side inflation. Supply side, we know that COVID really crippled supply chains. They're still not online to their full capacity. And the Fed, they're really in charge of this whole ship, right? So the Fed, they have two mandates. The Fed has stable prices, AKA inflation, and maximum employment. Well, inflation's out of control and employment is tight. Employment's good. We have a 3.6% unemployment rate. So the Fed right now is panicked because we know the supply side's a mess as far as inflation, but the demand side, there's too many dollars out there. So the reason we're in this position is because bad fiscal and bad monetary policy. It was a bad combination of both. You had trillions of dollars of stimulus that were given out by the administration and the government. And then you also had a Fed who's had very loose or accommodative monetary policy, meaning they kept the Fed funds rate at zero for many years. And they did a ton of asset purchases. They have a $9 trillion balance sheet, most of which is mortgage-backed securities and treasury. So they were literally trying to inject liquidity in the economy, do a ton of purchases, keep rates low, and spur economic expansion. And listen, they were successful, but it caused too many dollars and too few goods, and it's no wonder where we have this big inflation problem. Now, a lot of people, when they hear the Fed hiking the Fed funds rate, they think that means that the Fed's hiking mortgage rates. Well, it couldn't be further from the truth, but this is one of the tools that they have where they are hiking short-term rates. It's a overnight rate that banks lend to one another, and what they're trying to do is literally destroy the demand side of the economy. Now, the Fed, I'm always critical of them because the Fed's a group of academics, right? Very few of them have any real-world business understanding or experience, and the Fed, in my opinion, is one of the big reasons why we see all these boom and bust cycles. They go way too accommodative and have way too much liquidity that they inject for too long. They cause these booms, and then on the other end of things, they start tightening, and then you get these busts. And right now, the Fed is going to hike us into a recession. They just hiked 75 basis points. They're probably going to have to hike 75 basis points at the July meeting. We'll see what happens in September. But they want to get the Fed funds rate up towards like 3.4% or so based on their mean projections, if you look at their dots plot, because they want to cut down on inflation. That's their biggest concern right now. But if you look historically, the Fed always hikes us into a recession. We're already seeing signs of the economy slowing. We're seeing things like an inverted yield curve out there where, for periods of time, the 2-year was higher than the 10-year. That's a symptom or sign of weakness. So why am I bringing all this up? Well, I think it's important to understand how our current financial system works. And we very much are in a centralized finance system. So I wanted to give you a little introduction as to the Fed and some of the problems that can occur. Now listen, this talk is not to say one system is better than the other or anything like that, but clearly crypto is gaining a lot of attention, a lot of investor interest, and part of the beauty of it is that it's decentralized. So instead of having a Federal Reserve, a central bank that controls to a high degree the money supply as well as the cost of money and has all these different levers that it can pull to impact the economy and they haven't been doing a great job of, it doesn't run like that in a decentralized system. So we're going to go through some of this stuff together. And, the big thing that the Fed has done is they print more money, but they don't print it with like a printing press like, you would imagine. Now it's done digitally. But the Fed also has the ability to change the record or remove debts, right? You've heard about bailouts that we've had through different financial crises, right? Companies that were deemed too big to fail. So the Fed can really change the record and remove debts and really remove somebody owing somebody a ton of money. And they've increased the money supply by about 40% over the last 18 months. It's no wonder why we have this really, really high inflation. Now, in our centralized finance system, we also need banks, right? So most of the dollars that we use are digital today. A very small percentage is actually cash. We're very much a credit economy as well. So when we take a look at how it works with a bank, let's say that I have a debit card, right? So I go to the store, I swipe my debit card, and then what happens? Well, that processing unit goes and checks my bank to make sure I have the money that I say I do. So your bank, behind their paywall and their security, they literally are keeping a ledger that's keeping track of, okay, my direct deposit comes in, I swipe the card, it deducts that out, and it basically keeps a live running tally so you don't have what? The big issue of double spending, right? You don't want me to be able to swipe the card 4 times real quick and spend more money than I have in the account. And there's a lot of things that banks do well, but some of the criticisms of banks is that, and one of the reasons why I think crypto is kind of coming in vogue is some of the current events we're seeing out there. So, you've seen stories in Canada where if somebody was supporting the Freedom Convoy, they froze your bank accounts. In Russia, freezing a bank account. So in our centralized finance system, the money is yours in the bank, but you do not bank yourself. And we rely on these banks and these middlemen and the Federal Reserve to not only control the supply of money, but to facilitate the flow of money and the transfer of funds to one another. But listen, settlement with our current system is slow. If you take a look at credit cards, right, they can take 48 hours to settle. If you look at checks, it can take 72 hours. Wires domestically, you can do in a day, but try to send money overseas, it could be very expensive, take a long period of time. And then what if you want to go to the bank on the weekends, right? You can't go after 5 p.m. or on Saturday and Sunday in most cases. So you do not bank yourself and you don't have complete control over your money. So before we really talk about Bitcoin and what it's trying to do, I want to try to make an analogy here for you for how the internet really changed the flow of information, much like Bitcoin is trying to change the flow of money. So before the internet, information was centralized, right? Now everybody's used to the internet, but when you wanted to, back in the day, learn about history, what would you do? You'd go to the library, you'd get one of those Britannica encyclopedias, and you would read about history. But what was the problem with that? Well, those books were created by a few thousand contributors, and they literally wrote history. Now, whenever you have a centralized source of information like that, there's always room for error. There's room for maybe looking through a biased lens. I'm sure if you read our history books and you go to another country and read theirs, the perspective is going to be quite different. There's an old saying that history is written by the victors. So when the internet came out, it decentralized that flow of information. And instead of it coming from one source, now you have things like Wikipedia, where you literally have hundreds of thousands of writers that contribute and fact check one another. So this is an important thing to understand because it reduces manipulation, it reduces fraud, and it really truly gives you the clear picture. And it's similar to what Bitcoin is trying to do for the flow of money and to decentralize the flow of money. So the way I want you to think about Bitcoin is it's really a new monetary system. And it is decentralized. It's created for the digital world. It is digital currency. But this system operates without the need for a central bank and without the need for banks that act as middlemen in our current system. And you have complete control over your money. It's a peer-to-peer system. At any point in time I want, I can send my cryptocurrencies to anybody in any corner of the world, typically in minutes and much cheaper than you would be able to do so by wiring somebody money or ways that you could do it in our current financial system. And the other thing that's very different about operating on the blockchain and cryptocurrencies is that there's no changing of the record. Everything is final. The transactions are what's called immutable. So there's no erasing somebody's debt. There's no bailouts. We've actually seen this recently with things like Luna. And there's been a lot of, through this bear market that we're going through, there's been a lot of scenarios where, listen, you sometimes see projects fail. And, if you're not operating correctly, there's nobody that's going to come and save you in this cryptocurrency, decentralized blockchain world. Now, some people might look at that as a bad thing, but it's really more of a truer, I think, monetary system. So with banking yourself, what's important to note is that number one, I at any time can control my money and only me. So you have your own private keys without getting too much into the weeds on this. You have your wallet. If you remember your seed phrase, you can literally take your money anywhere you want in the world and nobody can touch your money. Nobody can, not allow you to send it on weekends or anything like that. It is completely your money. But if you think a little bit bigger picture, we're all lucky to be, I think you guys are at USC, right? I mean, we're all lucky to be in the United States. But, if you think about the population out there, there's almost 2 billion people that don't have infrastructure, right? So they don't have banks. They don't have the ability to even have a net worth or to have an identity. So some things that the blockchain, and we'll get a little bit more into the blockchain, is really, I think, the bigger picture story, is that with internet and a cell phone, you can give people the chance to actually have a net worth, actually have finances, and actually have an identity. And it's not that far off. You have brilliant people like Elon Musk, who's been launching satellites into space for quite some time now, and his goal is to, through Starlink, have worldwide Wi-Fi coverage. And then if you think about cell phone companies, what's the lifetime value of a cell phone customer? And you combine that with Moore's Law and how cheap it is for them to make these cell phones now, you could see a world where a lot more people are going to be connected. A lot more people are going to have finances and identity. And these are just some of the cool, bigger picture thoughts that cryptocurrencies and the blockchain, I think, can help us to achieve. So we talked about Bitcoin being a new monetary system, and a new monetary system without a bank, without a central bank, and without banks to facilitate funds. And you might say to yourself, well, okay, Dan, that sounds all well and great, but who's keeping track of this thing, right? How does this system work if you don't have those two big middlemen and players? Well, the answer is the blockchain. So the blockchain, listen, when I first got into cryptocurrencies, I consider myself pretty educated on the markets. Obviously, this was very different, but I found it very hard to get a good grasp on at first, and it's complicated. And the problem is that, listen, taking something complicated and making it easy to understand is an art. And there certainly was not a lot of literature out there or a lot of videos out there that I think did a good job of it. So it can be confusing. It can be a little elusive to get your arms around it. So I'm going to try to explain it to you in like kind of a simple way, where the blockchain is really just like a way of verifying things. It could be transactions, right? When we're talking about Bitcoin, it's verifying, you sent somebody Bitcoin, they sent you Bitcoin, and keeping that record. But blockchains can be used to verify anything, right? So if you think about all the different centralized systems that we have, whether it's the DMV for identity, whether it's voting records, whether it's title on a house and stuff like that, or you have to go to the public records to see if there's any liens on the house, all of these things can be put into a blockchain. And essentially, what you're doing is you are decentralizing this verification process where instantaneously you will be able to see if somebody owns the property, if there's any liens on it. And without knowing that person, because of the way the blockchain works, it's really called like a trustless system. You don't have to have trust. You can just know that it is accurate in real time. So there's a lot of advantages to the blockchain. I personally think that we're going to see over just the next few years so much use cases in the real world of blockchains being utilized, and we've already started to see it. But I really do think that this is the most exciting part about the whole DeFi cryptocurrency space, because I think not in 10 years, but in the next few years, blockchains are going to kind of like revolutionize and really change the way that things are verified and the way that a lot of the things we do today, they're going to look a lot different in not that long of a time. There's an old saying, the change happens much faster than you can ever imagine, right? So let's go back to Bitcoin, right? So the blockchain in Bitcoin's instance is, and Bitcoin has its own blockchain, right? And it is essentially the way that you verify transactions without the need for a bank. So remember our example that we used where the bank has a ledger for my account. The bank, remember, they take track of, okay, my direct deposit comes in, I'm spending this money, and it keeps a running ledger to make sure that my balance is up to date and I'm not spending money that I don't have. I'm not double spending. Well, Bitcoin was really the first instance of really proving that the blockchain can work without the need for a bank. So what it is instead of a private ledger, it's doing essentially the same thing. You have a public ledger. It's called a transparent ledger. And you literally have millions of computers around the world that plug into the Bitcoin network. And these millions of computers, instead of your bank that's doing this, these millions of computers are essentially doing the same thing where they are verifying the transactions, they are keeping the record accurate and making sure that there's no bad actors in there, right? And this might sound well and good, but then you might say, well, Dan, why would these computers want to do this, right? Why would these companies, why would these individuals, why would they want to plug into the Bitcoin network and verify the transactions? They're obviously a very necessary part of this equation. And the answer is the reward or the financial benefit is in the right place. So by verifying these transactions, and listen, without going too deep here, essentially solving a math question and being the first to write the block to the blockchain, you get rewarded in actual Bitcoin. So currently, right now, the reward is 6.25 Bitcoin. So you're talking about like $130,000, $140,000 that you get as a reward. You also get any fees that are attached to the transactions. So there is very much a battle for computing power and to be able to write these blocks to the blockchain as fast as you can because the reward is so great. And here's the interesting part. There's no Federal Reserve. So Bitcoin runs on something called a protocol, right? Meaning it's already written. There is no changing of this protocol per se. And the supply of Bitcoin, you might say to yourself, well, where does the new Bitcoin come from, right? There's no Federal Reserve that's like, we need to create this money. Instead, that reward that we just talked about, currently at 6.25 Bitcoin, that's the only way you get new Bitcoin into the system. So the way you get more supply of Bitcoin is a byproduct of keeping the network secure. So it's a very smart kind of enclosed, I think, magnificent system out there. And because of the way that it runs on a protocol, there's really no inflation out there. And we're going to cover that in just a little bit. Now, listen, cryptocurrencies as an investment, well, you guys have clearly seen some of, the crashes that we've seen, depending on when you're listening to this, right? I mean, we saw Bitcoin go down around $15,000 just this past week. It's now come back a little bit, around 22,000. But in my opinion, I don't think cryptocurrency is going anywhere. Some of these smaller projects, maybe there's some risk of that. But Bitcoin as an investment, Bitcoin as a store of value, I think it is probably one of the most exciting investment opportunities that exist today, as far as a return goes. Yes, it's been taking a big haircut from 69,000, now around 21,000 or so, or 22,000. But I think it's a really good opportunity, in my opinion. I think that everybody should have some exposure to it, right? Because of the potential upside. And this is not really anything new in cryptocurrencies. If you've been investing in it, it's not uncommon to see a 50 or 80% haircut as you see market cycles go through. One thing that's a little different about this cycle is that really, since cryptocurrencies have been trading on exchanges, it's only really seen a bull market, right? The stock market has just been on one kind of big bull run. Currently, we obviously know that we're in bear market territory on all the indexes and exchanges out there. And I still think there's more pain to go. I think that we're going to be headed for a recession. During recessions, we typically see risk-on assets not perform well. So I also think that now, due to the participants in the market, you could see cryptocurrencies have some further pain to go, unfortunately, as well. But I do think that these are like multi-generational buying opportunities as we see it go a little bit lower as we're in a recession that, if you believe in it, I would put, 5 or 10% of your portfolio into it. If you don't, I'd still put 5, right? So I would have exposure to this because of the opportunity. And listen, you have to remember, a lot of people, especially these old investors out there, right? Really brilliant people, okay? I mean, you look at like Munger and Warren Buffett, right? I mean, these guys are some of the best investors of our time, but they're kind of like dinosaurs. I mean, they don't believe, they've never really believed that much in the tech space. But some of these people calling things like this a Ponzi scheme or a scam. And then you also have many other really, really smart people that see the picture of it. And you have to remember, back when the internet was created, everybody thought that was crazy. If you want to laugh at something, look up on YouTube some videos of naysayers about the internet when it was first introduced. And now it's second nature to us, right? I mean, we literally couldn't imagine a world without the internet. I think that this could be that big of a change or a quantum leap in where our economy and where the world is going with the blockchain and with cryptocurrencies. So I'm obviously very bullish on the space, but while it can be very risky, there's also ways to earn passive income in this space that I think many people aren't aware of, right? So when you talk about putting money in your bank and getting 0.06% return, which is like essentially nothing, and when you factor in inflation, you're negatively yielding 8.6% or so. There's ways that now that you're not the bank, you can act as the bank, right? So how does a bank make money? They take your deposits, they pay you very little, and they lend it out at a higher rate, and they make that spread. Well, when we talk about cryptocurrencies, remember, there's no bank. You bank yourself. You can act as the bank. You can do lending. You can do staking and provide liquidity. And there's a lot of different ways, as long as you do it in a safe and researched way, that you can earn passive income in the crypto space as well. So it's not all just high risk, although many of the investments can be very volatile and risky. But as you'll see here, the reason why it's hard to ignore, and these numbers were updated, this is from Charlie Bolello, very great analyst on the markets. If you guys want to give him a follow, he's great. But this is as of 2021 because we don't have the full year for 2022. But why can't you ignore cryptocurrencies? Well, Bitcoin has provided, it's been the best investment over the last 10 years by a long shot, right? So it's averaged 230% return per year. And you could see, compared to some of these other investments out there, it's not even close. Yes, there's a lot of volatility, but obviously a lot of return as well. And I do think that we're at some levels that provide some very exciting times over the next few years to see that really return well. But when we talk about Bitcoin and inflation, I had mentioned previously that it's like the opposite of our current system, right? So the biggest problem we're seeing is heavy inflation. Well, Bitcoin, it runs on a protocol, and the current reward, as we talked about, is 6.25 Bitcoin. So what does that translate into? On average, it translates to 900 Bitcoin being created each day. So how does that math work out? Well, the protocol adjusts the difficulty, okay, of essentially solving these math problems and verifying the network so that about every 10 minutes, a new block is mined to the blockchain. And that means if you do the math, there's 144 blocks per day with a reward of 6.25 Bitcoin for each block. You get 900 Bitcoin that are mined or created every single day. So that is your consistent supply component of Bitcoin. But what happens every 4 years? There's something called a halving, which essentially means that the reward gets cut in half. So come the year 2024, the amount of Bitcoin as a reward will be 3.13, and that means the amount of Bitcoin that's going to be coming to market every day as new supply gets chopped in half as well to 450. So you can see, unlike the inflation environment we're in our centralized finance system, this is very much the opposite, where inflation is actually going down. And what's interesting is by like the year 2051 or so, they're gonna 2150. They're estimating based on the math that that's when the last Bitcoin will ever be mined. But you could see how, just going out not too far, how little the reward gets and how little the inflation gets. And right now we've mined over 90% of the supply of Bitcoin that can ever be in existence. So the reason why Bitcoin is an exciting asset class to me is because it is literally the most scarce asset. Why does gold have value? Well, there's obviously perceived value, but gold is a resource that's finite, right? Meaning we don't know exactly how much gold's out there in the world, but it's not like you can just print more gold. You have to go ahead and mine it out of the earth, and it is a rare natural resource. So Bitcoin, there is a finite amount of Bitcoin. There can only ever be 21 million Bitcoin. That's it. There's no way to create more of it after that. So you literally have the most scarce asset that we've ever seen that's investable. And at the same time, what's happening with adoption? Well, you could see this is an adoption model, by the way, of Blockware Solutions. A young guy, kind of like you guys probably. His name's Will Clemente. He's a really great on-chain analyst, but he works with Blockware Solutions, and they did some really interesting adoption models. And they use things like the internet, and basically it's at a faster pace of adoption than the internet because it now has the rails of the internet to expand upon. But you can see where they estimate we are in this adoption story, right? So still extremely, extremely early. And you could see how, over the next few years, even though it doesn't look like this line's going up, these are huge increases in the adoption story. And then you could see once it gets critical mass here, what happens. And then at the same time, you have supply that is going like this, right? So you literally have demand or adoption going up and to the right and supply coming down and to the right, meaning, you you have a very scarce asset that's only going to be more in demand. So that's why, to me, there's a lot of noise on the day to day, month to month. But if we look out a few years, I think people are going to look back at this time and say, boy, what an opportunity that was to invest in Bitcoin around $20,000. Because I fully expect over the next bull run to be well above $100,000. Ways that you guys can get into Bitcoin if you were interested in it. There's different ETFs out there. These are futures ETFs, so they're not my favorite. They try to mimic the spot price of Bitcoin, but it's a futures contract that's put into an ETF. But those are easy ways that you can get into it. I'm really hoping and waiting for maybe this year, maybe next year, a spot ETF, meaning the underlying assets within that exchange traded fund are actual Bitcoin. I think that'll be a big thing for the adoption story, where it's very easy for people with traditional money and traditional accounts that aren't going to go open a Coinbase account. They can get actual exposure to Bitcoin. Another way you can do it is some of these grayscale Bitcoin trusts out there. But the best way, in my opinion, to do it is by going to Coinbase or one of the exchanges. Coinbase is publicly traded in the U.S., so probably one of the safest ways that you can do it. But then buying the asset yourself, because there's other ways you can buy it, like Robinhood or different accounts like that. But the issue is while you're getting exposure to Bitcoin, the execution is not good, but then you don't ever get custody of the coins. And one of the really, I think, exciting things and cool things about the blockchain is that, and cryptocurrencies, is that when you have custody of the coins, for instance, like I have Coinbase Pro and I have Bitcoin in there, I can then send it anywhere I want. I could take it offline, meaning put it into my wallet, not have it on an exchange. And literally, on a piece of paper, I can write down my seed phrase, and then I could take that with me anywhere, right? And I could always retrieve those funds. So it's a completely different world. You have to be careful with these things, but I think the best way to own it is to buy it through something like a Coinbase, take custody of it, and then you have the ability to leverage that and either do lending or staking and take it offline if you wanted to into cold storage. So it gives you a lot more opportunities. So team, I think we're probably right on for time here. I don't know if you guys had a couple questions, but those of you guys that want to learn more, I have an Instagram here that I post some stuff, but also I have created a company in the crypto space. And the reason why is, I'm a big believer in kind of looking for points of friction in the market and then trying to present solutions. And when I was investing in cryptocurrencies, not only was it hard for me to find people that I could trust. It seems like everybody out there is a crypto expert, or now they're like a technical analyst on YouTube, right? And it's like, well, is this guy somebody in his mother's basement here that's, writing some lines, or is it somebody that knows what they're talking about, right? So there's a lot of information out there, but what I wanted to do is create something that was a membership-based service to really take a look at the market from 4 or 5 different perspectives. And what I mean by that is that, some people analyze things on like a technical basis, looking at the charts, and they're pure technical analysts. They believe everything's in the charts. Some people are macro analysts, right? Some people are on-chain analysts. In my opinion, why would you limit yourself to just one? Take all the stimulus in that you can, and then make a confluential decision on what's happening in the market. And that's something that we do with my team, where we look at the macro news and the economic data, what's happening with the Fed. We take a look at the technical analysis, we look at the on-chain analysis, and we also do a lot of leverage trading as well, which is something that can be pretty exciting, especially if you want to be a little bit risky and see some returns in the short term. So give us a check out at cryptocharge.com if you want to learn more, but you can sign up for a free 2-week trial to check it out. But Josh and Zane, I'll send it back to you guys.
Well, first of all, that was one of the best overviews of the blockchain I've seen. I've looked at a lot of YouTube videos and stuff, but you did a great job of outlining that, and also talking about how it relates to our current economy, because that's sort of the lens that people look through these things. I did have a question for you. You've talked a lot about the upside of the blockchain and how it's great for certain things. Do you have any thoughts as to what things shouldn't be decentralized, and where you still think centralization is valuable and something that we should keep?
Boy, that's a tough question off the cuff. But yeah, I mean, I think that there's always going to be a need for centralization, especially in certain areas. But I think that like parts of it can be decentralized, right? Like, there's only so much that a blockchain can do on its own. I mean, just to give like an example, like if we're looking in the housing industry, and we're looking at title and real estate agents and stuff, right? I mean, I think that there's ways that you can replace like those individuals to a degree, but they're not going to be able to account for things like nuanced liens or I think there's always going to have to be a degree of like the human interaction, but a lot of the things that we're doing today can be faster, cheaper, and more accurate with the help of a blockchain. So, it's hard to give you some specific examples, but it's a good point that you bring up. There certainly are areas that I think, there maybe shouldn't be decentralization.
Cool. I'm not sure how much time you have left, Josh. You want to maybe ask a question, and then we can...
Yeah, sure. Dan, thank you so much for being here and speaking to us today. One thing I wanted to clarify was blockchain is the technology behind it, and Bitcoin was the first implementation of that technology. And there are other coins such as Ethereum who use that blockchain technology, and there's so many use cases for that.
And they have their own blockchain. You're 100% correct. Ethereum is another one that I think is a fantastic project. Ethereum, the best explanation I could give you would be like, imagine if you could have invested in the internet back when the internet was created, right? It runs on a protocol, the internet, called TCP/IP, right? It wasn't an investable asset, but if you invested in the internet back then, boy, you'd be a rich person today, right? If it was like an investable asset. Well, Ethereum, and you've heard of this before, like Web 1.0, Web 2.0, Web 3.0, right? So Web 1.0 was like you can go online and read. Web 2.0 is, you can interact online, like kind of like the internet we know today. Web 3.0 is like you can actually own it. So Ethereum is its own network. So think about it as like an investable asset that's a network play, just like the internet. And you have companies that create their projects on that network, right? So you know how on your phone you have the iOS operating system, right? Or on an Android, you have your operating system. And then if you go into the iOS App Store, you have different applications that were created to run on Apple iOS, right? And you can pay for them and you can transact on them and Apple gets a piece of that, right? Well, think about Ethereum as its own network, and then you have all these different projects that have created their apps, and they're called fittingly dApps, or decentralized apps, on that network. And then anytime they transact on the network, they have to pay what's called gas fees in Ethereum, right? But you can actually own Ethereum, you can actually own and invest in the network, and you can actually even have a say in like what happens in this network. So it's called Web 3.0 as opposed to what we're used to, and it's changing the game, and it's a great point that you bring up. But all of these projects have their own blockchains, but Bitcoin is kind of the first one that, and many of the blockchains are different as far as their consensus algorithms, and I don't want to get too in the weeds here, but Bitcoin was like the first one that really proved, I think, the use case of the blockchain. But you bring up a very good point, Josh, that there is many other different projects. There's over 6,000 coins out there, probably more now, and there's many different blockchains, and most of these projects have their own blockchains that they operate on.
Awesome. So we're sort of right over time here. We'll close it out here. Thank you so much for joining us. Love to do a part 2 sometime if you're interested, and maybe talk more about use cases or something. But again, one of the best overviews I've heard. Really appreciate it. And thank you for coming on.
Well, thank you guys for having me, and best of luck to you guys. Take care.